Start. Hello, everyone, and welcome along to this live webinar/workshop. And today we have Simi, our Director of Mortgages, specialist on buy-to-let mortgages, and Ksenia from our Customer Success team. The agenda of today, and we will try to do this workshop on a monthly basis, is the focus will be mortgages. We will speak a bit about bridging finance as well. So the agenda for today will start. Simi will give us some market summary of what's going on right now. Then we will share a specific use case and also speak about specific, like we'll spotlight, I think, one buy-to-let product, Simi, yeah?
Yeah, yeah,
And then we will have time for questions and answers. So be prepared with any question you have about buy-to-let mortgages/remortgages and bridging finance. You can write it on the chat. If it's relevant, we will answer as we go. And if not, we will have the time toward the end of this webinar. We are running a promotion during this webinar time. And so I will share the details on the chat in a sec. So 1 second, let me see if I can share the screen. So the promotion is to our premium plan, but if you subscribe to our premium plan or the premium plus plan, then you get also benefits on finance. So you can get 150 pounds discount on bridging arrangement fees and broker fees. If you are on the premium, this is for the first application. If you're on premium plus, also for the second one. Simi, can you see the screen?
yeah. I can see the landlord platform, the portfolio overview.
Okay, perfect. The focus of this webinar is not the platform, but of course you have all the features available, and there are some great premium features and premium plus features. You can source properties, analyze deal, manage your existing portfolio, and apply for finance. If you want to activate the premium with the coupon code of this webinar, go to your settings page. On the plan details, click upgrade. Then use this coupon code BTL 1025. We will share the details on the chat. Click apply, and you will get the premium plan for the first year, for the entire year, for 49.5 pounds, and the premium plus for almost 150 pounds. And basically, you can get it back by discount on arrangement fees and broker fees if you apply with us for a mortgage. We'll share it again toward the end of this webinar, but let's start. So Simi, there is I think the market is, I don't know if it's just say challenging, but you can see definitely uncertainty. We're waiting for the budget. So let's start with how do you see currently the mortgage market out there, the influence about, from the economic and the potential budget. So over to you.
Yeah, so I don't think it's all like doom and gloom at all. I think we've seen some really positive changes in the buy-to-let market. I think we've definitely had worse markets. And in some cases, I think it's been quite stable. We haven't seen, really quick rate reductions or rate withdrawals like we have seen in the last few years. So I would say there's actually quite a bit of stability within the market. The most recent news that we've seen recently is based around inflation. So inflation stayed at around 3.8% in October, which has been the same now for the last 3 months. It's still way above the target of 2%. So that's going to impact interest rates because, with high inflation, there are high interest rates. In terms of the base rate, we've seen the base rate held at 4%. It's still been the lowest it has been in the last couple of years. So again, it's not as high as where we've seen it before. It's also not as low as we've seen it before. But I think historically, where we saw the base rate really low, that was quite abnormal. So I think, we are getting used to a new sense of a new normal. Um, what we've spoken with our lenders about and looking at the rates and where we think the rates will be, and economics predict, sorry. that there's not going to be any, cuts towards the end of this year. It's going to be likely early next year. So hopefully we are going to see inflation come down early next year around February, and then we'll also see another base rate cut, hopefully then.
Sorry, I was on mute. Thanks, Simi. How this like basically perhaps a few words about the correlation between the Bank of England rate on the mortgage rates, because we see that usually if we see it right, basically mortgage lenders would reduce rates even before, like based on predictions on Bank of England rates and things like that.
Yeah, it's really interesting to see what lenders do before a base rate announcement. So, some lenders will factor in what they think is going to happen. So, maybe about a week or two before, you'll start seeing some lenders reduce rates or they increase them off the anticipation what they think the Bank of England will do. So, sometimes that will give you an indication of what's going to happen. But I mean, anything can happen and anything can change. A lot of lenders do also kind of follow each other as well. So, what we normally say is when it comes to applications is start the process a few weeks before the base rate review, because when we submit an application, we carry out regular rate reviews to ensure that you're on the best rate anyway, throughout the process. So a rate can't be secured until you submit the application. So it's always best to always, get ahead of what's going to happen. As we've seen, after the mini budget, anything can happen with such a small window. So yeah, it's interesting to see what lenders will do. But I think the reality is no one actually knows. It can change very, very quickly.
So Simi, let's say that like if you submit a case for a customer with a specific product with specific rate,
Yeah.
like if during the process rates came down, is like there's still something to do, like during the submissions process and the underwriting and valuation of legal, like
Yeah,
something that can still change.
absolutely. I mean, we sometimes change products literally weeks before completion. So the process is when we submit an application, the rate is secure at that time. Let's say, for example, it's 4%. If there are any reductions, we then will let you know. We'll send you an updated mortgage illustration. We'll also check the rate with your lender we've submitted the case to, as well as the wider market as well. Because if there is a significant saving to be made with another lender, we'll switch the product. So we'll constantly be checking. But yeah, you can change the product normally literally 1 to 2 weeks before completion. When it comes to completion date, lenders normally need about 5 working days to request the funds. But yeah, we can change the rates, and as long as we get the offers before completion, you can change the rate pretty quickly.
Okay, so this is good to know. I think it's a good point to remember. Um, okay,
Yeah, because sometimes just on that, I think sometimes we speak to clients and they want to hold off and see what, happens with the base rate review, or they want to hold off just, on their decision. But actually, once you've secured a rate, you can lock that in, and what your mortgage offer is normally valid for 3 to 6 months. So if rates do change between then, you've already secured a rate, but also we can check for lower rates available.
okay, this is good. Now I think, Simi, we can share like a case study, a real case study that can basically let people know about the process. Let me share. Yeah, you can share the screen now.
Thank you. So can you see my screen?
It's loading.
It's just my other screen, sorry. Can you see that one now?
Um, yeah, okay, perfect. Okay.
Perfect. So, what I wanted to discuss today is just a real life case study of a client that completed with a mortgage with us. So, our client bought the property via a limited company, used landlord for the bridging finance. It needed a full renovation. So, we see this strategy quite a lot with property investing. So, finding a property below market value that needs a lot of work that you want to essentially enhance and then refinance at the full market value. So he got the bridging loan. He obviously had it for about, I think it was about 6 months. And we needed to find a lender who was able to look at the work he'd done and lend against the post refurbishment value, so what the end value was after all the works had been done. So the lender we selected was super flexible with this. They were happy to consider refinances with less than 6 months ownership, and all they wanted to see was a schedule of work so we could justify the uplift in value. We also needed a lender who was going to act quite fast as well, given that he was on a bridging loan, wanted to repay it as soon as possible. So that was really important when selecting a lender. Now, the result of this was within 18 working days, so about 2.5 weeks, we got the mortgage offer for a limited company rate. It was about 4.54%, and it was 75% of the increased market value. And then that allowed the client to be able to use those funds to expand his portfolio, go again, while also replenish the funds that he'd spent on the refurb. So that just allows him to be able to expand his portfolio again and again with this type of strategy.
Okay, thanks, Tim. I see a question about this use case. The question if you can disclose the lender, and perhaps you can speak about the panel of lenders and in general, and which lenders can do this kind of stuff and act
Yeah.
with speed.
We get these inquiries a lot, and one of the most common things that clients say to us is that they think they have to wait 6 months until they can refinance, but that's definitely not the case. So, the rule of thumb is if you've bought a property and you do a renovation, you can normally refinance on the open market value with less than 6 months ownership because you can show why the value, has increased. You can show why there should be an uplift. So lenders typically will ask for things like a schedule of works, just a list to see what you've done, and the costs. They might ask for receipts, before and after photos. Um, and if, for example, you haven't done any works, we do actually have lenders who are fine to refinance the open market value. That's a lot more niche, and there's not as many lenders who will do that. So to open you up to most lenders, you have to be able to show that you've done works, but you definitely don't have to wait 6 months. And we sometimes hear that, you need to wait for the land registry to be updated. You don't need to at all. You just need to show that you've submitted the TR1 form, and lenders are fine to consider the application. So there's lots of different ways around it, and lots of different lenders who are happy to consider applications with less than 6 months ownership, no works, below market value, properties as well.
Okay, thanks. See, there are some questions about bridging, but we will answer them, I think, after we are done with
Yeah.
presentation. Yeah.
So what I wanted to also highlight as well is what I think we want to do as well each month is just highlight a product and a lender who offer something really unique for landlords. So this particular lender, Aldermore, they're part of a South African bank, First Rand, and they offer a multi-property product. So this product allows landlords to add up to 30 properties onto one single mortgage product. So if you are a large portfolio landlord, this really streamlines your portfolio because you have one monthly payment, one direct debit, essentially one loan across all properties. When it comes to the underwriting process as well, it's done as one application. You have to have separate valuations per property, but it's one valuation. If it's a single let, it will be a free valuation as well. If you're refinancing, they offer free conveyancing. If it's a limited company, you might have to pay additional costs for personal guarantees per director, but that's quite standard for limited company conveyancing anyway. But this product works really well for our landlords because if you are looking to, aggressively expand your portfolio and you need to refinance a large number of your properties, this makes it a lot easier. It's one set of documents, it's one direct debit mandate to complete, one portfolio that we complete. So it really, really makes the whole process easier than submitting multiple applications. The caveat with this type of product is that completion has to be simultaneous. So let's say you're purchasing 5 properties altogether, you have to make sure that completion all lines up on the same date because it's one loan, so it all has to complete on the same day. You can also like sell a property as well. Let's say you refinance 10 and you want to then sell one of them within your fixed rate. You just have to pay the early repayment charge to get out of that property. And also, you just have to make sure that the stress test on the wider portfolio fits the current loan. So there is flexibility there. The other caveat is that you can't do a purchase and a remortgage, and you can't do a single let and a HMO on the same product. It has to be all single lets on a multi, or all HMOs on a multi as well, and all purchases and all remortgages. So there are a few conditions there, but it's a really, really good product that's worked amazingly for some of our clients because it minimizes your upfront costs. You're all with the same lender, and it's also a lender who really understands the buy to let scope. The majority of business they do is buy to let, so the underwriting process is super smooth. Something else to mention as well, actually, if you're a first-time landlord, they don't allow the multi-property product. You have to be an experienced landlord, but that only means having 6 months of buy-to-let experience. I can see there's quite a few
Yeah.
questions in
So
chat.
yeah, but perhaps before we go to the questions, yeah, I wanted also to show people how first they can do their own research on the Lendo platform, and also how they can apply or start the process with us. So I can share the screen. Um, yeah, can you see my screen now?
Um, yes, I can see it now.
Yeah. Okay. So from your landlord account, if you go to the finance section, then on the mortgages sub-menu, you will find live products. So here, basically, this page is connected and integrated into a sourcing platform. So basically, we have real-time mortgage products from, I think, almost all of market lenders, which you can see the current rates and the fees and the total cost on each product. We also stress test the portfolio that you already uploaded to this account, and also the specific property. So we also stress test and make sure that the rental income, for instance, if I will reduce it, then perhaps I will see that I will not meet the criteria of some lenders. So it's not just yeah. So you can see all of these lenders. I did not meet the stress test of this specific um, a, a property. Basically, they want to see that the rental income can cover the mortgage payment at a higher rate. But if I increase it, then I should see more products. Cindy, perhaps you want to speak about the differences between like the rate and the fees, which I think it's important. Before that, I
Yeah.
so that you can also order this list by initial rate or by fees or by total cost. Total cost will take into account, one second, total cost will take into account the rate, the interest rate for the entire period. For this example, I chose like fixed rate for 2 years, and we'll take the fees, and basically based on that, you can see the total cost for the initial period of 2, 3, or 5 years. Yeah, Simi, over to you about
So with the fees, the total fees that Avram's referring to is the lender arrangement fee. So that's normally a fixed fee or a percentage of the mortgage you apply for. And then the other fees are also a valuation fee and an application fee, which normally is a few £100s depending on the property value. So they're like all of the fees associated with the mortgage product. The fees you see here don't include broker fees or legal fees. But something to really note about the rates. So you'll see a lot of lenders reduce the rates well below the base rate, but those rates will have quite steep arrangement fees. So as I mentioned, it's a percentage of the outstanding balance. Now, going for the lowest rate doesn't always mean it's going to be the cheapest product overall because of those fees, and the lender fee gets added to the total loan. So when you come to refinance, whether that's 2 or 5 years time, you will have to pay, the loan back plus those fees. So it can be quite costly. So the way we source our products is based on the overall cost, the total true cost. So what's going to save you the most over 2 or 5 years, taking into consideration the interest rate as well as any fees, because we're looking for what's going to save you the most on a product as opposed to just give you the lowest rate. But it also depends on what you're looking for. If cash flow is most important and you need the lowest monthly payments, it makes sense to go for the lowest rate. If you care more about what the product's going to cost you, then you can play around a little bit with the different fee structures. But yeah, we'll always try and source, the rates, the products based on the overall cost.
Yeah, this is a good point. Then if you want to start the process to get your mortgage illustration, you just click on review your mortgage illustration after you chose the product. Then you need to put some more details, and you will get your mortgage application. And then within 24 hours, you should receive the mortgage illustration. And then you can decide if you want to proceed and submit a case. You can also schedule calls with our teams for mortgages and bridging. We will share the link tree, Sarel and Ksenia, if you can share it on the chat to schedule calls. Now, I think, yeah, Simi, we think we have some questions, but if you want to say something before, we can.
Yeah, I was just going to say, if you're not sure on what product that you want to go for, just book in a call with me because we can go through different types of scenarios, for example, the lowest rate versus no fee options, and we can make it really clear, what your monthly payments will be, what the fees are. Because I think it's really important to know exactly what all the different products are before you lock in for 2 or 5 years, and before you add these fees onto your mortgages. Because let's say, for example, your property value doesn't go up significantly, and when you come to refinance, you're above 75% loan to value. That could impact the available products to you at that time. So you need to really think about, is your property in a place which will appreciate, will go up in value and you can absorb the fee? If not, will it be an issue when you come to refinance and then you end up paying a higher rate anyway because you're above 75%? Something also to mention as well with the fees is that a lot of landlords anticipate, the rates will come down. I mean, realistically, no one knows what will happen. And if the rates don't come down within 2 years and you have to pay those fees, whether that's 3%, 5%, you could be paying a lot every 2 years. So it's really worth getting a comparison and having a full breakdown of the products before you decide of which product to go with.
Okay. All right. So now let's take there are several questions. I will start from the beginning of the chat. You can also, if you want to ask the question, you can raise your hand and we will give you the permission to speak. But let's start. 1 second. Okay. Do we deal with semi-commercial, commercial mortgages and bridging? So I will answer about bridging. Yeah, bridging we do. And we do it as a lender. So there is a process in the system, also in the link tree that we attached on the chat. You can start a process for bridging finance, or you can schedule a call on the link tree that we shared as well. What about semi-commercial and commercial mortgages?
Semi-commercial and commercial mortgages, we do have lenders who offer products. With semi-commercial and commercial, you normally need to be able to demonstrate landlord experience. The rates will be higher as well because it's a lot more niche. And particularly with semi-commercial products, lenders are also looking to see that the residential dwelling is larger than the commercial dwelling. So normally it's like a 60%, 40% split. So that's something to bear in mind. But we do have lenders who can consider those types of mortgages as well.
Okay. Is your bridging funding rolling or deducted? Okay, so this is a good point. On bridging, we have different type of products. So basically, we can roll the interest. So you pay the interest just in the end. Or you can go higher on the LTV and then you pay monthly. We can also deduct the interest, but basically the rule is to be at 75% by the end of the period. Having said that, if you have purchase that you were able to purchase the property below market value, and we had some cases like this that the surveyor came back and say, okay, the market value is actually higher than the purchase price, then we can go with the market value cut by 90% of the purchase price. So potentially on bridging, we can fund up to 90% of the purchase price, and up to 75% of the real market value. Now, if you perform refurbishments, then we can support 90% of purchase price up to 75% of market value on day one, but we can also fund the refurbishments based on second valuation, and there we will look on the GDV, what will be the value post refurbishment, and this is based on the progress of the project. So I encourage you to schedule calls with our bridging advisors if you want to hear more, or to apply online and then start the process, and then we will contact you as well. But we have, and we also have the dynamic product, which you can get quite low rates if you repay early. So there are different rates for 3 months, 6 months, 9 months, and 12 months. And the rate goes up if you repay after 3, 6, 9, and 12. So if you are able to repay early, you will pay less interest. Okay. For bridging finance, how much does the developer need to put down typically? So again, I think it's the same. Like basically, if we go 90% of purchase price, then you need to put down 10% based on the market value. But if the market value equals to the purchase price, then usually it will be 25%. So we can release 75% if you service the loan on a monthly basis. If not, the LTV will be a bit lower. Other lenders will look at 75% and will deduct the interest. So the actual net release will be lower than 75%. So it's the same. If you're rolling the interest or deduct the interest, eventually you need to look on the net release and the loan amount. Okay.
One of the other questions, what are your mortgage fees? So typically with a mortgage product, you'll have a valuation and application fee, a lender arrangement fee, which can be added to the loan, and then conveyancing costs, which are separate. And then we also do charge broker fees. So depending on the type of scenario you have, if it's a personal individual mortgage, we charge 595. And if you're a portfolio landlord, we charge 750 per application, and limited companies 850 per application. What I will say is, although we do charge broker fees, depending on the loan amount, we will be flexible where we can. At the end of the day, we're looking to build long-term relationships with our clients, and we'll be as flexible as we can as well. So, it's not a fixed fee. It depends on the loan size, depends on the scenario. If we're submitting multiple applications, we'll look to be as flexible as possible. So we do charge broker fees, but we'll be flexible with them.
Yep. And we have some private message about a specific deal. I think Salim, so we will just, if you can leave your email if you haven't, and we will contact you about this specific case. Okay, another question. What are the lender rules and criteria for first-time landlords?
So for first-time landlords, some lenders will have a minimum income requirement. Some don't. It really depends on the lender. Lenders are also looking to see if you've got any property ownership experience. So if you own a residential property, and mainly for a first-time landlord, it's just to see property ownership experience and to see that you've got an income available. On a buy-to-let, the available lending is based on the rental income anyway. So the criteria is just to make sure that the lender's happy with your overall profile. But for first-time landlords, most lenders are comfortable with that. And we also do have lenders who lend to first-time buyers as well, whether that's in your personal name or a limited company as well. So there's loads of lenders available who'll be really flexible on that.
Okay, John asked, if capital is tied up, I would be interested to know the maximum LTV for auction bridging finance. Okay, so I think I answered that. Basically, we can go as high as 90% of the purchase price, but the market value should support it. And if not, it will be 75% maximum. But then, if you perform refurbishment, we can fund the refurbishment cost as well. Another question. Yeah, Simi?
Oh, sorry. I was just going to answer Ollie's question. What are the risks with the multi-property product? Could they call the mortgages to be repaid unexpectedly? No, not really. It's very rare that lenders will ask for mortgages to be repaid, especially if you've got multiple properties on one loan. What I will say is this particular lender, we have a really strong relationship with them, and they are one of the best buy-to-let lenders I would say in the market. They are amazing for portfolio landlords, and they have a really good landlord team that once you have completed on your property or properties, you can call them up and they can be quite flexible. So they're a really, really good lender. So I wouldn't imagine they would ask you to repay it unexpectedly, no. The only risks really with the multi-property product, I mean, it's not really a risk. It's only if you want to sell the property. You just have to go through an underwriting process with them. They'll run the stress test to make sure that the rent on the other properties cover the loan. So it shouldn't be an issue at all.
Yeah, I have another question about this product. Can a current portfolio, existing portfolio, be converted to that product? I think you mentioned things about early repayments and things like that. So how it works basically.
Yeah, so let's say you've got a portfolio of properties and you want to move it onto the multi-property product. It's just like a refinance, except you're doing it all on one application. So you can wait till your fixed rate ends on your current product and then move it onto this product. But it'll just be the same process where you have a valuation underwriting process, make sure you meet the criteria. What I will say, if you're an experienced landlord, it becomes a lot easier for this type of product because when you're an experienced landlord, lenders waive things like minimum income requirements. They just want to see that you've got an income, whether that's from rentals. So I think for portfolio landlords, this type of product is amazing because it's just it's just really seamless, which is I think, what most landlords are looking for.
And there is another question related. Let's say that I have a portfolio, uh,
Yeah.
and I basically got a mortgage or refinance to this multi-property product, and then I'm adding more properties, like I purchase new ones, or just when they are up for renewal, so don't want to pay the early redemption fees, I prefer to add this property to the product. Is it possible to add properties to this product post
That's
completion?
a really good question. We get this a lot. No, you can't add to the current loan, but you can have multiple loans. So for example, we've had clients before where they'll do like six properties on one loan, four on another. So they just have multiple multi-property products where they group up their properties. And we also get clients who, for example, one limited company will hold, X amount of properties and they have different companies to do it. So you can have multiple multi-property products, but you can't add to the same one.
I think for me, it's like it looks like it really makes sense. Like if you have more than three properties to consolidate them into one product, it's also easier like to manage, less, time consuming, less like hassle, and basically the timing also is becoming together like
And
oh,
particularly for limited companies, when you're applying for a mortgage, there is a lot of underwriting to be done. And a lot of other specialist lenders require a business plan, they require portfolio schedules, cash flow forms. It's a lot of underwriting. And if you were applying to a lender and you were having to submit that many documents for the, different properties, it becomes a lot. And this lender, the product is there to make it easier for landlords. So all you have to submit is one portfolio schedule, which we do for you anyway. One direct debit mandate you have to fill in. It's really, really seamless. And particularly if you do have, lots of different properties, different bank accounts, different dates the direct debits to come out, it just makes it easier knowing that all your rent comes in one day and your direct debit goes out another day, and that's it. Your portfolio is really streamlined in that sense.
yeah. Okay, thanks, Denise. Another question. Do you carry our searches from the start or when you have qualified the individual?
This is a really good question because I think sometimes when people are completing the inquiry online, they think a credit search is going to be done. It's not at all carried out. The only time, so when you apply for a mortgage via Landlord or even a bridging as well, your credit check isn't carried out when you complete a questionnaire or an inquiry. It's only carried out when you apply for a product. So to submit an inquiry, to find indicative rates, no search is done on you at all. It's only when we apply to the lender. And when an application is submitted to a lender, it's done in two stages. So the first stage is a decision in principle, and that's normally a soft search anyway, so that won't impact your credit file. Only when it goes to the full application stage is a full credit check carried out. But usually, 9 times out of 10, if you pass the first stage, the decision in principle, you're likely to go to full application anyway, and it's not going to be an issue. So yeah, as long as you pass the dip, it shouldn't be an issue. But if, for example, it did come back adversely, we get a copy of the credit report, we review it, we speak to our lenders, we always see if we can overturn decisions as well.
Okay, Simi, before we continue, I want also to highlight the promotion for this webinar. Just during this webinar time, you can get the premium plan with 50% off. And then if you are a premium user or premium plus user, you get discounts on mortgage arrangement fee, bridging arrangement fees and mortgage broker fees. So if you go to the settings page on the account information, plan details, click upgrade, then in the coupon field, enter the value BTL 1025 and click apply coupon. Yeah, 5, sorry. And you will get the premium with for 49.5 pounds for the entire first year and almost 150 pounds for the premium plus. So I think that, it's this webinar is not about the functionality, but there are very enhanced functionality to manage your portfolio, to grow your portfolio with landlord. It's quite affordable, and you can also get the discounts on the mortgage or bridging. So yeah, hurry up and upgrade, and let's continue with the questions. Yeah, I had.
A question from Farah, how much is your fee for sourcing the product? So the way we charge broker fees is depending on the complexity of the case, we'll charge the fee, but we only charge. So let's say, for example, we agree 850 for a limited company. We only charge the fee when you get your mortgage offer, and then we defer the payment until completion. So if you don't get a mortgage offer or the lender declines your case, we don't charge a broker fee to you at all. The only time we would charge a fee where you didn't get an offer is if you withdrew the application and we've already undertaken a lot of work on the case. But we only charge the fee usually when you get the offer. So if you don't get the offer, we don't charge it, which I think is quite fair and standard for the industry.
Okay. I have a question from Joel. With regards to bridging finance, can you use a personal loan for the deposit? The answer is yes. Yeah, basically, I think the solicitors will definitely verify source of funds, things like that. But as long as we are the first charge, and the other loan is subordinated, basically, we don't have any issue with that. So yeah, this is
But
feasible.
just on that, I think it's good to mention for mortgage lenders, if you're using a loan for a deposit, they don't like it because they see it as like debt on debt. So for mortgage providers, they don't. If you're doing the refinance to exit the bridge and you've funded it this way, most lenders, it just depends on their underwriters. They should be normally okay with it, but they will ask a few more questions around it. But let's say you've enhanced the value significantly and you can replenish, those funds, then there's no reason why you can't build a picture to a lender and say that you're going to repay that and there's not outstanding debt. But if you're going for a straight mortgage and your deposit's a loan, lenders won't look at that.
Okay, and there is a follow-on question, well, similar but different type. So can you use equity release on other properties you own to cover the deposit for? So for bridging finance, again, the answer is yes for mortgages, Simi?
Yeah, you can use funds raised from another property to cover that. What I would say as well is we've done this for a few of our clients recently, actually, where we've done the refinance on the mortgage, raise the funds, then they're going to use landlord for the bridging process, and then they're going to exit from the bridge onto a standard buy-to-let. What works really well with doing it all via landlord is that we can use the documents for each different case. So it was very easy for me to be able to give the bridging team the mortgage offer, the completion statement that we already had on file for our client to use as the deposit. So it just speeds up the process massively. And internally, we can all speak to one another about the profile of a client, what their kind of strategies are and everything. So it just speeds up the process for you as well. So that's what a lot of our clients have had a really good experience when we do it all from the mortgage to the bridge as well.
I have one. As a UK citizen living abroad, paying taxes in the UK, How long would I need to be resident in the UK to qualify for standard buy-to-let mortgage?
So if you're a UK, if you've got a UK passport, most lenders, so some lenders will be quite tricky. They say they want like a 3 year residence history. Some specialist lenders will be quite flexible. They'll want to see that you've been back in the UK for 3 to 6 months, at least. Some will be 12 months, but it just depends on the lender. But if you are a UK citizen already, then normally it's about 3 to 6 months for a specialist lender. But just to be completely transparent, that doesn't mean you're going to get the best rate just as you've returned. It's going to be, a specialist rate, which can be kind of 5.5%.
Okay. Do you generally get better rates for the portfolio mortgage compared to individual mortgages?
So for the multi-property product, they are more competitive than if you were doing a standard product. So they're normally like 0.05% cheaper. In terms of our products and where we get access to our lenders, so we belong to a mortgage club via Legal in General. That gives us access to all of our lenders. It's pretty much most of the lenders on the market. We work with all of the top sourcing lenders. There's a very small handful of lenders we don't use, but to be honest, they're not great for buy-to-let or limited companies, so you're not going to be disadvantaged by that. But yeah, most of our rates that we get access to are the top sourcing lenders. What
Okay.
I would also add on that is, I think most brokers do get access to the same products, but I think what makes Landlord different to other brokers is because we're predominantly in the buy-to-let space. Most of the lenders we work with, we've got really strong relationships with. So if, for example, we need help during the underwriting process, we have contacts at all of those lenders who we can call up, and they can really help, get things moved along quicker. So I think that's what differentiates us massively is our presence in the buy-to-let space and also our understanding of the mortgage process. Because we're dealing solely with buy-to-lets, we know exactly what lenders ask for. We know how they are in terms of underwriting speed, what they're looking for, what documents they'll need, and we can also easily prepare them. So, for example, you'd have myself, your advisor, but also my colleague Fraser deals with all the admin side of the process. So we have, every single document that a lender requests on our files, which we know how to generate, we know how to fill in and then send back to them. So it makes the whole process for you a lot easier that we know exactly what the lenders are asking for.
Another one, I'm new. I don't have any experience. I have a house, but I have the right to buy for 5 years, and I can't make a bright for 5 years. But I want to start with buy to rent, the way to get a mortgage. You know, like you did you understand?
I'm not sure if you're asking if you can rent out the right to buy property. If you are, you can't let out the right to buy property. It has to be used for residential basis. So I'm not sure. If you want to maybe drop me an email or a message with a bit more information, I can go through that.
Okay.
Um, Another question. Under what circumstances would lenders insist on me having income or savings and applying for a buy-to-let as a company? So this is a really good question because I actually had a client ask me something similar this morning because for limited company mortgages, lenders still assess each director as they would an individual. So they are looking for ownership experience of a property. They are looking for an income. They don't really use or consider savings because savings can go at any moment. In terms of income, most lenders need to see there is an income, just in case, you don't have the property let. They need to see that you can comfortably cover the mortgage. But in terms of income, they will accept rental income. If, for example, you're recently self-employed, lenders will use perhaps business bank statements to show that you do have an income available, but you just haven't been self-employed that long, and that can support your mortgage as well. So there are lots of different ways around it. Some lenders also don't ask for proof of income, so it's definitely worth having a conversation to see what we can use. But as I mentioned, affordability isn't based on income; it's just used to support an application.
Okay. Yeah, this is a good one. This is the last question I see. Simi, this is for you. If I currently have a broker that works well with me, what can you offer to make me change my mind?
This is a great question, and I totally get it. And I think, as brokers, we are competing against other brokers. What I will genuinely say is my experience in the buy-to-let market is so much stronger than other brokers. Most brokers will advise on residential and buy-to-let mortgages. 95% of the cases I personally work on are buy to let, half of them are limited company. I know exactly what lenders are looking for. I know how to check the limited company structure on Companies House. I know what they're looking for in terms of SIC codes. I just know my lenders inside out. I know how they work. We know the underwriters. That's what's going to set us apart from other brokers. You know, getting you a good rate is the bare minimum. That's what brokers are there to do, is get a good rate. The reason our clients use us is our service. We know exactly what we're doing. You also get regular updates as well. We speak to clients where they don't hear back from their brokers in days or weeks. Me or Fraser always get back to you pretty much same day or next day. So really, it's our service, it's our expertise, and also I just know the buy-to-let market inside out. So I know where to place your case from just having a conversation with you, which I genuinely don't think other brokers know.
Great points. Simi, do we also do holiday lets?
We do holiday lets. So holiday lets are definitely becoming more popular for landlords. Some lenders will use, for affordability, this is really important to know. Some lenders will just use the AST value as if you were to let it out on a long let. They just use that value for kind of caution that if they have to sell the property, you know, what the affordability would be. But we do actually have access to lenders who will use a seasonal value, so the low, medium, and high value, which not all lenders will do. So it's definitely worth speaking to us to see which route to go down.
And another one, the deposit for a buy-to-let mortgage must be 25%.
In most cases, to qualify for the best for the best rate, you need to put down 25%. Some lenders will take 20%. There is a very niche lender who will take 15%, but you are going to be paying 6.5% in the interest rate, so it's going to be more expensive. And the rental needs to pass a stress test. But for generally most mainstream products, it's 25%.
Do you bridge to term products? Do you bridge? Perhaps I think it's the opposite, no? Like basically we can do the bridge and then you can refinance for a term product. And we have many examples of basically we can provide the bridge and then Leno Finance with Simi can take care of the exit with the refinance for a a term loan.
What
Uh,
I would say on that is it's important to note that Landlord and Landlord Finance are two separate entities, so it is going to be two separate transactions. So, you know, you're going to take out the bridge with Landlord, but when you come to refinance, it's through Landlord Finance. So we're an intermediary who get access to our lenders through our mortgage club. So it's not like a refurb then let product or anything like that, where you have one product. It's two separate products. You've got the bridging product and then the mortgage product when you exit. But as I mentioned earlier, I think you know a lot of our clients find it really helpful where we cover the mortgage or bridge because we can internally discuss you know the best way forward on it.
how do you build a portfolio with limited savings?
You could do that if you already have a property, you can refinance the property and then use those funds towards a deposit as well. That's probably the most common way our landlords do it is from existing, you know, an existing property or even refinancing a residential home. A lot of our clients do that to kickstart their deposit for a portfolio.
Yep. And I have more questions. I have several properties in my personal name with various lenders. Am I able to move them all to one lender, basically for the multi-property product? Yeah.
You can, yeah, so as long as if they're single lets, you can put up to 30 properties on one loan. If they're HMOs, again up to 30 properties on one loan. But you can definitely look to move them all to one lender on the multi-property, or you could also just move them with the same lender and then just have separate products. It just depends on your preference.
How long is the maximum of time for bridging mortgage to repay? Okay, so the usual terms is like 12 months, but we have the option to go to 18 months, a bridging loan, which will give you more time, and then you can repay early with no penalties. So basically, there are like only 3 months interest minimum, and then you can repay the loan. Yeah. Okay. Do you have a lot of experience and knowledge of splitting titles of verb?
Multi-unit freehold block.
Ah,
So, yeah, so it depends. It depends because each lender will do it differently and each lender will have different criteria. As long as the solicitors are also happy with how you're splitting it and if it's to be done on completion, then lenders are okay with it. We're quite comfortable with if, for example, you're splitting the titles on completion, separate products. But that's going to be really a case by case basis. But yeah, we can look to do those types of transactions. What trends have you seen as a broker in recent years that stand out to you? It appears an increasing number of London-based landlords are buying up north. Really interesting question. A lot of our landlords' portfolios are based up north, purely because the yields are better and also it costs less to put the deposits down. So, a deposit up north is going to cost you a fraction of the price that it will in London. So a lot of our clients, they will kind of concentrate their portfolios in the Midlands, Durham, Darlington, Manchester, and they tend to stick to one area. Something to bear in mind though, if you do stick to one area, is just making sure that all of your properties aren't in the exact same postcode, because then some lenders will think you're overexposed in that area and may not consider lending on all of those properties. So you kind of want to spread out your portfolio a little bit, but maybe concentrate on a specific location. But a lot of our clients will build their portfolios in Nottingham, Liverpool, Durham, Darlington, Leeds as well. And a lot of landlords are also going for more HMOs up north as well because the yields are just a lot stronger. And again, you're putting less of a deposit down.
okay. I see like a question about someone that's trying to upgrade with no success. Um, Let me try and share again. And let me see if, let's just, I want to see who is this. John, I think. Okay, so John, if you are still here, let me know if it's the same. If you go to the settings page or click on the slash premium that I showed on the chat, then you click upgrade, and here you need to put BTL 1025, then click apply. So the price here has changed. And then if you click upgrade, yeah, the price here. So the coupon code is for the annual plan only, not for the monthly plan. Um, So yeah, let me know if it doesn't work, and then we can take it offline after the call. Um, but it's a reminder for everyone that you can get the 50% off during this webinar time. Can great features, enhanced features for the platform, but also benefits if you apply for finance. Let's see, we would like to continue with more questions if we have.
Sure. There's another question from Jazz. If your current buy-to-let mortgage has higher redemption costs, do you do second charge mortgages? We don't, unfortunately. We only do first charge mortgages, so we don't do like secured loans or second charges or anything. Okay, so Patty's question, the interest rate is for bridging loan. So you need to apply, you need to submit your inquiry to be able to obtain the rate. It has to go to the underwriter, and it depends on the loan to value and other factors. So you'd need to inquire online to get the bridging rates. It's not the same as a mortgage where you can view our sourcing system. It's done slightly differently.
Yeah, you can get indicative rate if you start the process. Usually it will be almost all the time, like most of the time, similar to what you will get in the end. On the dynamic work product, we can go lower as 0.75, 0.8 for the 3 months period, but then it can go around like 1% and a bit slightly higher on the 12 months rate. But yeah, as Simi mentioned, if you start the process, you will see indicative terms quite immediately, and then the underwriting team will confirm.
One of the other questions is just hearing of 30 properties into one application. What are the benefits and how long has this been around? It's been around for quite some time. Not all lenders will offer it though, so only a very small handful of lenders will. The benefits are, as I mentioned earlier, are, one direct debit, so it streamlines your portfolio, one loan for the whole portfolio. When you come to do the application, it's just one application as well, so that's all completely streamlined, and it just helps you manage your portfolio better when you've just got one payment as opposed to multiple payments. Um, do you offer development finance? So for mortgages, no, but for bridging, potentially yes.
Yeah, we will offer to fund also the refurbishment based on second valuation and based on the GDV. So we will fund the 90% of purchase price up to 75% of real market value, existing market value, and then we can lend more as you progress with the refurbishment.
Another question from Jazz. This is a really good question because we get a lot of inquiries about this. Do mortgages exist for specialist supported living investments? So a lot of landlords are moving towards, guaranteed rental schemes, housing association lets, because it just guarantees your rent for a period of time. So a lot of landlords are looking for those types of tenancies. With lenders, so some lenders will allow, for example, housing association lets, but they have to be on the government's social housing list that they approve of. Some other lenders, more specialist lenders, they just want to make sure that the tenants aren't vulnerable, or if they do require assisted living, they might not be able to consider it. There's very niche lenders who will allow this type of mortgage, but you have to make sure that in your agreement there's a break clause for either tenant or the landlord. That's what they're really looking for. Agreements usually as well can't exceed 5 years, but it is one we can help with supported living. It's just you're going to be looking around the kind of late 5, 6.5% in terms of rates because it's very specialist. And the reason behind that is, if you're a lender and you do have somewhat of a vulnerable tenant, it's very difficult to evict vulnerable tenants. So that's why a lot of lenders won't do it, and it's a lot more of a niche market.
Very good. I see there's some issues with applying the coupon code. We need to check it after that. So just, people that try to upgrade with no success or they get charged for the full amount. If you get charged for the full amount, we will refund 50%. And if you fail to upgrade, just either leave your email address to the hosted panelists or contact us on the chat in the app, and we will make sure you get the coupon code. Yes, so many questions today. So we want to answer a few more.
Yeah, got a few more minutes. There was quite a good question actually from Olu. When lenders are reviewing a I assume buy-to-let application, do they become concerned if one of your existing buy-to-lets has a tenant who's currently defaulting on the rent? Really, really interesting question because obviously this is not your fault as a landlord at all. As long as you are still covering the mortgage, that's usually okay. And if you are planning to obviously evict the tenant, if you are leaving the tenant in there who's not paying the rent, that can be an issue for lenders because part of the underwriting process is lenders want to look at the rent you're receiving, and if that tenant isn't paying the rent, then they would be concerned and they might look, for further confirmation that you can cover it. But there are, scenarios where, let's say you've done a refurb and the property's empty, lenders can't really penalise you for having the property empty. So it's a really interesting point, but it really depends on the underwriter and the whole scenario. But it really is, when it comes to your broker, it's our job to build the picture to the lender and put it to them in the best way possible that's going to get your application agreed. But yeah, that's a really, really good question.
Okay. Okay. John asked if I listen correctly, if I offer the property at 350K market value being sold at 200K, you can potentially lend 100% to acquire it and refurbish it with bridging. Not exactly. So we will cap it by 90% of the purchase price. Okay. So if the purchase price was 200K, even if the property was 350, we will lend up to 180. So we will go 75%, but capped at 90% of the purchase price. We have I think that Becky, perhaps we have flat with buy-to-let mortgage balance of 142K, potential to turn flat into two flats with, I believe GDV of 400K. do I have to pay of current mortgage? I'm not sure I understood.
Yeah.
So
So I am not sure if that's like more of a development question because for the mortgage, the lenders are only going to lend based on the current structure. And if you are going to convert it post completion, then that would almost compromise your current mortgage. So I think if you were going down, let's say you were going to get bridging finance on it to then cover the cost to convert it into two flats, the bridging loan would essentially replace your current mortgage. So you'd essentially have one bridging loan and then you could refinance it back onto a buy-to-let mortgage. Not sure if that was fully what you were asking, but if you do have more questions, book a call in with me and we can talk through the different scenarios as well.
okay. Another system don't allow me to upgrade. Yeah. Okay. Looks like we have issue with the coupon code. So please leave your email address to the host and panelists if you can, and or contact us on the chat and we make sure what's going on. Yeah, I think we can wrap up this webinar series if we have something that we have missed. Not sure. Um,
I think if you do have any other questions, just book in a call, and we can go through, any other questions or scenarios that you've got, and then get you over some indicative options.
yeah, so let me share again the link tree. So if you click on the link that I just shared on the chat, you will get links to schedule calls or to apply online. Um, Again, don't forget you have this 50% off. We can keep the session open if you still, I don't know if there is a problem, if for everyone there is a problem or just for several, but if once we will fix it, you can contact us and then you can get the 50% off. And yeah, so thanks everyone for joining today. And thanks, Jimmy. It was super helpful and valuable as always.
Thank you.
And yeah, so feel free to reach out to us with any further questions or schedule calls with our team.
Thanks, everyone.
Thank you very much.